Welcome to the Sharad Kohli show, where I try and simplify for you the complicated subjects related to economics, business, finance, tax, stocks, investments, and related. My goal is to enhance your wealth, to augment your wealth, to increase your income, or at least to prevent you from incurring losses. Well, something very unique has happened in the world of foreign exchange market, which has led to a direct impact on commodities market, especially gold and silver. This is about Japan and its currency yen. Well, we all know that there is a dollar index, which is a basket of six currencies. This is measured against dollar. Let me name those currencies for you. Japanese yen, euro, British pound, Swiss franc, Swedish krona, Canadian dollar. These are the six currencies. They are made as a basket and they are measured against dollar. This is called dollar index. DXY is the name given. The fluctuation happen, every time dollar moves up or every time one of these currencies move up or down, the basket moves and the dollar accordingly is measured against this index. Now in January 2025, Japanese yen used to be 140 for a dollar, which was fairly okay because Japan is an export-driven economy. And there have been instances in the past where Japan has deliberately devaluated its currency to give benefit to the exporters. But the interest rates, and because of weakness of the Japanese economy, the interest rates were down at 1%. And Japanese population is aging. Japanese brands are gradually fading. You must be noticing Mitsubishi, Honda, the way they used to be once upon a time. You don't see them anymore because of aging population of Japan. Basically, the economy is on a decline. It is now almost close to the Indian GDP. Well, let's leave apart the population and the per capita, at least in absolute numbers, about $4.2 to $4.3 trillion is where Japan stands. India is about 4.15, just about neck to neck. Maybe we had left them behind. It's because of the weakness of rupee that we are now slightly either behind them or just about equal to them. So of late, because of collapse or because of the interest rate difference between Japan and America, there was a huge flight of capital which happened from Japan to America. For that reason, the Japanese yen against the US dollar started collapsing. It went down to 164. And in the recent weeks, the Japanese government did try to rescue that. $53 billion worth of dollars was sold and yen bought, but it hardly had any impact. Then the Japanese government was in a state of flutter. It didn't know what to do because capital was moving away from Japan into US dollar assets. It made a request to the US government that you have to now rescue. Now, obviously, both the countries are close allies. They have left the Hiroshima and Nagasaki, which happened in 1945, behind. They've buried the hatchet, as they say. And lo and behold, America did come to the rescue. And American dollars were sold, yen were bought by the American Treasury in the derivative market as well. More in the derivative market, less in the Treasury. There's a hedge market as well. Because of this operation, a lot of dollars were sold and yen were bought. Consequent to that, yen recovered and came down to 154, 155. A bit of a relief for the Japanese, I would say. But as a result, dollar became weak. The dollar index went down from 100 to about 99. Well, that's a significant movement in dollar index. If you say it's hardly a movement of probably 1 point or so. Now, it so happens that every time dollar index goes down, one of the currencies in the basket is strong or the dollar becomes weak rather. It's the same thing. So there is a derivative market in the US where these dollars were sold and yen were bought. This derivative market is controlled by an agency called CFTC, Commodities Futures Trading Commission or Trade Commission. This monitors not just commodity market but also the forex markets. The data said that on 28th of July, 35,339 long contracts of dollar were held and 17,200 short contracts were held, which is more long contract because dollar was going strong, and that's what President Trump wants. Dollar should remain strong. that heavy long position, because of this operation of rescuing yen, lot of long contracts were unwinded. It's called long unwinding. Long unwinding basically means that when you cancel out the long contracts and square them off by selling them. Now, because of that sale, the dollar index went down. And every time dollar becomes weak, gold and silver, they rise. Because gold and silver are considered to be alternates of dollar. Dollar is an international currency. I made a video on that. You can see in the history. Next best measure of value is gold. Gold may not serve as a currency in the times to come, but it will be an international measure of value. You've seen two countries who deal with each other. Neither country A has dollar as a currency, neither country B has a dollar as a currency, but they measure in dollars. Their currencies get measured in dollars. That becomes a common parameter. So gold is being considered as a threat to the dollar because that will be the next measure of currency. It is being said that the gold standard, which was in America before 1971, may come back, and the strength of a currency of a country would be determined by the quantum of gold held by that country. So the dollar index fell, the dollar became soft, dollar index fell, and gold and silver prices, they rose from about $4,090 or $4,100 straight up to today morning. It even touched $4,300. As we speak now, it's afternoon, 6th of August. As we speak now, dollar is about $4,260. I'm sorry, gold is $4,260. In Indian rupees, it is at about 1,48,000 to 49,000 rupees per 10 grams. So where the gold was stuck in that range of 1,40,000 to 1,45,000 for a long time, weeks together, it has broken that range. And I had said earlier in my Hindi channel, it's called Sharad Kohli Official, by the way, that this range would be broken if there is a big trigger upside or downside. So this is a major event in currency market. US trying to rescue a currency. US had its own interest also in rescuing this currency because a lot of US's debt was held by the Japanese. So not that US were doing charity or philanthropy by rescuing yen. No, it wasn't just that. It had its own vested interest in rescuing yen. So it was partly was the request. It thought it will hit two birds with one stone. One, it will heed to the Japanese request. Second, it would benefit the US debt also. So now the big question is, where does gold go from here? Will it hold these levels? But all depends on the geopolitical situation. If the war in Iran and US remains on hold for a month, then I would have a reason to believe that yes, war has probably come to an end. But every time there is a calm, there is peace. We hear of a missile being fired by Iran on some vessel or somewhere in Jordan, somewhere in Bahrain, somewhere in Kuwait. We even heard about an unconfirmed news of Dubai coming under attack, Jebel Ali Free Zone in Dubai. And the unconfirmed report said there were 7 explosions probably coming from Houthi in Yemen. So the geopolitical tensions haven't settled down at all. So geopolitical tensions means a harder crude price. Harder crude price means harder dollar index. Harder dollar index means harder bond yields. Harder bond yields means inflation in America. Inflation in America means that the Fed will increase the rates. If the Fed increases the rate, gold, silver come under pressure. So for now, yes, prices have risen, but whether this is the beginning of a rally, I think it will all depend upon how the situation emerges in the Middle East or in West Asia, as it is now popularly called. So keep a watch on what's happening around the world. And I think the best way, you need to consult your investment advisor if you really want to invest in gold or you want to enhance your investment in gold. It is best to consult your investment advisor. But the best way, if I would have done it, I would have bought in a staggered manner, a little bit at time. So that way you buy at different levels, you buy at corrections, you end up not investing your entire amount at one go. This is for the amount you've allocated to gold, and never keep all eggs in the same basket. Do not rely on a single asset for all your money, all your savings is the larger message which I would like to convey here. I hope you like the contents of this video. If you do like, my humble request, this is a new channel, just a handful of videos yet, probably 5 to 6 videos in the history. I'm trying to develop this, trying to bring more useful information to you. But for that, to keep me motivated, a very fervent and humble request, please do subscribe, press that bell icon, It's just a matter of moving a finger for you. For me, it becomes a huge source of motivation. So please do comment. Also, let me know what else would you like to listen from me, on economics, on business, on finance, on startups, on taxation, on stocks, on investments, anything related to money, as they say. It's all about money, honey. Thank you so much. See you again. Goodbye.